I just want to be respectful of everyone's time.
Oh, of course.
Let me move this thing right here before I share my screen. So, hi everyone. My name is Tesla Carrasquillo. I am an associate real estate broker with Keller Williams Realty Points North. Hi, I do know some of the attendants here, but there are people I do not know. So hi, nice to meet you. So I am here hosting this event with the lovely Tucci Gull, who is, I wrote down what she is because it's interesting. I'm not used to it, but she's a licensed mortgage loan originator. Hi.
Hello. So I just want to explain why it says Andrew Russell under my picture. So Andrew Russell is the broker and owner of RCG Mortgage. Even though I'm a licensed loan officer as well, I work on his team. And, you know, he was supposed to host today's meeting and he had a family emergency come up. So I'm just filling in for him. And
yeah, so grateful that you were able to fill in.
Of course.
Tucci's my favorite, and she's my go-to when it comes to any kind of mortgage-related issues. Maybe too much, so I rely on her. But so I want to give you a little bit of rundown of who I am. So again, my name is Tesla. I am actually a practicing attorney. I'm a mom of a 3.5-year-old, and I do real estate, and I do it because I absolutely love it. I grew up in Queens, and now I live in North Babylon, New York, on Long Island, and I do practice real estate in Queens, Nassau, and Suffolk County. And I thought when I started real estate, people find out you're a realtor and ask you a lot of questions. And most of the questions come from first-time home buyers. So I thought it'd be great to hold a seminar to answer all these questions. So if you do have questions, please, there's an area in the chat where you can start asking questions. We will dedicate some time at the end to answer your questions. So I think we're probably gonna be real thorough, so we might answer all your questions, but we definitely will look through to see if, you know, we didn't answer some of your questions. So it's definitely a partnership between the realtor and a loan officer. So that's why I thought it was smart to have us both together to talk to you about it, because, you know, the process of owning a home is also, you know, you're looking for a home, you need guidance on that, but also you need to buy it. And you need information on the mortgage, and I think that's what really trips people up. So I'm super grateful that Tucci's here to help us with that. First, I want to congratulate you. Buying a home is a big deal. It's a huge step, and it's a big part of your now future and your financial future of your family. It's a big deal and should be celebrated. I remember when I became a homeowner, it meant the world to me. So congratulations, because it is a big deal and you should definitely celebrate those small wins. I do have a little bit of a presentation, so I'm gonna start sharing my screen. Hold on one second. Do you see my screen, Jay?
Yep, I can.
Is it now just a presentation?
It's the presentation, yes.
Perfect. I'm gonna do it this way, even though I can't see myself, which is probably better for me.
Okay.
So we'll just start really quickly. This just kind of helps guide the conversation. And definitely the first step when deciding to buy a home for the first time is, you know, you got to get a real estate agent. And how do you pick a real estate agent, and why do you need a real estate agent? Well, because buying a home, although it's a seamless process, it's complicated and you're going to have questions, and that's why you have an agent to guide you through it, to tell you step by step what to expect, to be able to answer those hard questions. An agent helps you find your home, negotiate your home, get an offer, be able to recommend. There's so many things that an agent does for you, and the benefits of having an agent is endless. The first step, though, is to find one. And I recommend when you find an agent, you interview a few, or you find somebody who you know that you can trust and has already brought value to you. I'll give you a couple of distinctions. There are different types of agents, and you're going to learn that in the home buying process. In a transaction, there's generally, most of the time, just two. a listing agent and a buyer's agent. Listing agent sells a house and the buyer's agent represents the buyer. So when you're looking for an agent, you're looking for a buyer's agent when you're starting to look for your home. Again, the most important part about having a buyer's agent, if I'm being quite honest, is whether or not you trust that person, because that person has a duty. They actually have a fiduciary duty to make sure that you are getting the greatest deal possible. And they're also you're going to be partnering with this person to find your home, your biggest purchase probably in your whole life. So it's definitely you want someone that you can trust. And I hope that by already knowing me or after this presentation, that I've provided some value to you and I've earned your trust, and that when you do decide that it's time and you're ready to look for your home, that you would consider me. So again, a little bit about what the buyer agent can do for you and how it usually begins. So again, you first find your buyer's agent. You interview, you pick the one you like, and great. What do you need to do next? Generally, the next thing you do is get pre-approved. And I'm gonna let Tucci take over a little bit on that point, on what you need to get pre-approved and why do you need to get pre-approved.
Okay, so what a pre-approval is it lets you know what your budget is. You can always, of course, go look at homes and start shopping around and even put in offers. But without a pre-approval, you don't know if the numbers are going to make sense. You don't know if the bank is actually going to lend you that money, because us as mortgage loan originators, there's a lot of guidelines that are set by the government that we have to follow. So it has nothing to do with your demographics. It has nothing to do with, your credit score has some factor in it, but we have to see based on your income. Based on your income is what you're going to be approved on, essentially. So we have to see some paperwork and verify that you are actually going to be able to afford that house and be able to pay it off. And right now, especially with COVID happening, a lot of homeowners won't even let you in their home unless they know that you're actually qualified, because they don't see it being worth the risk to let you in their home if you're not even going to be able to afford it. So that's one thing that you're going to need it for. And the pre-approval just helps you know what your monthly payment is going to be, what you can afford, because you might love the house, but you might not be comfortable with the monthly payment, because in that monthly payment, you're going to have your homeowner's insurance involved, you're going to have the property taxes involved. Like, I had this family the other day, they went ahead and they put an offer in on a house, and it ended up their monthly payment was $4,000, but they didn't want to go over $3,000. That's a huge difference. So they lost money on inspection, they lost a lot of time, and it's just unfortunate. So getting the pre-approval is really getting you set to start shopping around.
Definitely. And I do believe, I think one of the biggest issues for us as realtors is a lot of homes, as Tucci said, that they don't even want us to let people in without a pre-approval. For me, I think the most important aspect of the pre-approval is being able to, hold on, make sure you can see my screen, right?
Yeah, you can just click next right underneath.
Okay, great. So being pre-approved means you know what you can afford. And that means you know what your budget is, meaning when I go look for homes for you, the next thing we want to talk about is actually finding a home. We know what price point to look at. We know, okay, look, you're pre-approved for $500,000. It looks like you want to be at this price per month. So we're going to look at houses from $475 and down, for instance. And with that pre-approval, we know that. Now, for instance, if you didn't have a pre-approval, then you could fall in love with a home that's way out of your budget, and it was just a whole big waste of time, right? So definitely pre-approval is definitely key. And that's a big part of the next step, which is the buyer consultation that I have with all my buyers, where we go over your price, the location, what kind of home you want to live in, bedrooms and baths, what school district, how far do you want to be from your job, what's your time frame, when do you need to move in? All that happens in the buyer's consultation. So definitely pre-approval is key. Then we can start that way with actually finding your home. what else happens when we find your home? So what would happen is once I have all your criteria, I input them into the MLS, or what's now called Home. Tucci, I think I expect from you, which is a little. Do you think you can be muted? I'm sorry.
I can mute myself. Yeah, of course.
Because I just hear it like perfectly. Oh, there's perfect. So what I do is I input all of your criteria into one key. You'll get a list of all the homes and the locations that you want. And so this market, maybe it's unfortunate for some, is selling hot. Houses are flying off the shelves. So often what happens is people who don't have agents are looking at Zillow, seeing a house they love, really wanting to see it when it's not available. Because unfortunately, things like Zillow and Trulia do not have the most up-to-date information, but an agent does. They have access to MLS, so and which would have the most updated information. So we won't waste your time in a house that already has an accepted offer, was already under contract. We do the lead work. I do the lead work to find exactly the homes that I will send you out. I know they're available. I know they're in your budget, and all you do is you pick the ones that you like, and then I schedule showings. And that's another big reason why people use agents, is because then instead of waiting on a line after line for open houses, you could have private showings on the homes you like. And that's also a big part of when we're looking for your home, is going to showings, seeing what you like. And sometimes you see homes you're not gonna find. It's not always the case that you find the first house you see you fall in love with. I mean, sometimes it is, but sometimes you go into homes and you absolutely hate it, and that's great. It's great for me because then I know what you don't like. And then we end up building a relationship that way, where it's like, you know what, I know what she likes, I know what they don't like, and then when more homes come on the market, I can already know what I can send out to that buyer without wasting any time. Another key important issue with finding a home is, especially in this market, because houses are being sold within a few days, is being the first to find out when a home comes on the market. And with access to MLS, we definitely have that. And I think that's one of the biggest pluses for having an agent, is that they're on the money when it comes to house just dropped an hour ago. They know right away. They can put you on what's called a prospect search, where you get notified right away when homes come on the market, because in this market, there's no time to waste. You definitely need to move fast. A couple of, let me see. So a couple of things that you want when we go to look at showings, just a couple of tricks or a couple of tips on what you should be looking for in a home. Here's a little list. I'm not going to go over it too much. We are going to be, after this seminar, you'll get a full list of different things that you should look out when you go into a home. Definitely don't judge a book by a cover. I see all the time where people walk in and they hate the furniture, they hate the paintings. I think that's the biggest problem, because you have to remember, you're going to make it your own. More important things to always look out for is the big issues, like the list says: roof, the plumbing. You also have to get a feel of the neighborhood, take a walk around, see if you even like it there. Making sure things kind of work, but again, that kind of also goes into your inspection, which I'll get to in a little bit. And definitely, when it comes to buying a home or searching for a home, you want to make sure you have a team, and that team consists of your buyer's agent, loan officers, and home inspectors. And who provides you guidance or be able to give you recommendations is your agent. I remember when I first bought my first home, I didn't know inspectors offhand. I didn't know law officers offhand. I was recommended. The people I used were recommended by my buyer. That's usually the case. So that's another plus. The same goes with your attorney, with a real estate attorney. Again, since we have all the experience, we can give you suggestions on that. And so you know the person that you're going to work with, you can trust. So now what happens? Okay, we go on a search for your home. We finally find the home that you love, and now it's time to make an offer. So what does that mean? So an offer is basically what you decided. Say a home is listed for 500 grand. You think decide I want to buy this home, I want to make an offer. So usually what the offer entails is what you are offering to pay for the home and the different terms. Um, in this market, it has been, and you're definitely in the loop and you're trying to buy a house now, or if you've heard people buying a house, it has been a case where people are paying asking price for homes. They're even offering above asking for homes because there's just so little inventory that people are willing to pay more. So that is something that a buyer's agent can guide you with. Because before you decide to put in an offer, what your buyer agent would do is complete what's called a comparative market analysis. Basically, I would go over all the homes in the area that has sold recently that is comparable to the home that you like. I'll look at homes that have pending sales, and I'll look at homes that did not sell. So I can compare what the really market value is. If I see a home that's practically identical to yours a couple blocks over, that's sold for 100 grand less than yours, and I see that's the case, then I know, and I would consult with you that that house is definitely not worth that much. You shouldn't put such a high offer. That's just an example. Different terms other than price, especially in this, like I said, market, different terms could be whether or not your closing date, if you have specific date that you need to close by, or that you need to have more time because say your lease is up, or other contingencies such as well, you're a first time home buyer, you wouldn't have anything to sell, but that'd be one of the terms, whether or not you had something to sell first. Another big one is what people are doing now, which I don't recommend, but people are doing it if they fall in love with the home, is waiving inspection, waiving appraisals. It is a kind of crazy market, but I just wanted to give you an example of different kind of terms that people choose. Also, with a big one is your down payment. That people, and Tucci will also probably touch on this a little bit, that down payment is a big deal because the more you're putting down, the more secure your loan is, but I will let the expert discuss that. So once we've discussed all that and all the offers, all that we're going to put in the offer, I present it to the selling agent. And then two things can happen. Your offer could be, well, three things can happen. Your offer could be accepted. You could get a counter offer, meaning they will give you a higher number that they would be willing to entertain, or it'll just be flat out declined. Again, the whole point of having an agent is because these negotiations happens between us agents. You don't need to be in the thick of it. And again, my best interest will always be on the buyer, just as the seller's agent's best interest will be on their seller. That's why it's always good to have an agent to be able to speak for you, because the seller, they're going to have someone to speak for them. Once the negotiations once your offer has been accepted, great. The next thing is to get your home inspected. And again, we always recommend different inspectors that you can use. The faster the inspection, the better. And during that home inspection is when an actual engineer will come in and look to see if there's any major issues. And those are the things that you definitely want to know, because for instance, if there's some foundation issues in the home that you weren't aware of, you don't know what you're getting yourself into. And then after the inspection, since when we can then negotiate some more and find out, well, you know what, there's definitely issues with a certain window or with some, the flooring, and you say, you know what, we didn't realize it was that bad. This is where the negotiation happens, where you would ask for a credit, or you can ask for the seller to fix something in the house. But then once all that's cleared up, then you get into contract, you find an attorney that we recommend you, or if you have your own, and that's it. Not that's it, but that's like the big scary part. Then I'm gonna let Tucci talk about the next, because then you need to pay for your home. And that I am not even gonna pretend to try to touch, and I'm gonna let Tucci go on with this. I'm gonna mute myself, Tucci, for you, okay?
Thank you. Okay, beautiful. So the pre-approval was just letting you guys know what your budget is. The pre-approval is not a mortgage loan application. So once you guys, after you get your pre-approval, what you guys would do is you would go out with Tesla, shop for homes, put in offers, and when you have an accepted offer, that's when I take over. I fill out your mortgage loan application with you over the phone, and just so you guys know, at least like for now, everything is done electronically. We never have to meet in person. You never have to come into my office. You can sign everything electronically. Once we fill out the application together, I submit it to what's called processing. The loan processors are going to go over all your documents. So those documents I collect when I'm doing your pre-approval just to make sure that everything is valid. Just to go into what some of those documents may be, if you are a W-2 employee, meaning if you're getting a salary, all I'll need from you is your pay stubs, your W-2s, and your photo ID. It's a different scenario if you're a self-employed person, which means if you're getting a 1099 or you're filing business income or anything like that, I will need 2 years of W-2s as well as your photo ID. So now you have a contract as well to go with the rest of your documents. What the processor does is they go over all your information, make sure that you are who you actually say you are, all the numbers for the mortgage are working, you are under the government's guidelines for the debt to income ratio, which I'll get into. And then once everything is verified, they will send you some disclosures to sign. Those disclosures are just they're going to go over your demographics, they're going to go over your loan amount, they're going to go over your rates, your taxes, your insurance. So it's very important that you go over everything, take your time, and make sure all the information is up to date. Because at the end of the day, remember, this is going to get submitted to the government. So you want to make sure all the information is correct. Once you sign those documents, now we go into what's called underwriting. Underwriter is the person that's going to essentially make the decision on your loan. They're either going to give you a yes or a no. They might ask for more documents in some cases, but it's very simple. Like I said, as mortgage loan originators, we have to follow certain guidelines. So we already know when we're taking an application pretty much if it's going to be a yes or a no. If it's going to be a no, we wouldn't even waste your time to begin with. That's why the pre-approval is very important. So the underwriter will go over all the documents. They will order what's called an appraisal. Appraisal is to determine the value of your home, because the bank is never going to give you a loan on a home if the value isn't there. So that's where Tesla's expertise comes in handy too, because when she's doing the comparative market analysis for you guys, she's going to make sure that you're paying the right price, which is going to help us with the loan. So let's say the underwriter needs more documents. What happens? I will contact you, or the processor will contact you. We will collect those documents for you, submit everything to the underwriter. And another thing that's going to come in handy for you guys is obtaining a title report, which your attorney will be able to help you with that. Why the title report is very important is because, let's say, I have seen this scenario happen, by the way, where a homeowner took out a huge loan and they used the property as collateral. And when our buyer bought the home, they didn't want to do the title report because they didn't want to pay for it. And then turns out 2 years from when he purchased the home, he found out about the loan. The person who lent the money tried to come after him because the property was used as collateral. So the title report will come in handy in a situation like that. They will let you know all the COs, all the permits, and everything like that about the property. And you will also need to get what's called homeowner's insurance. It's very similar concept to getting a car insurance, but this is going to be protecting your home in case of a hurricane like we just had recently, or a storm, or God forbid a fire, or anything like that that's not in your control. Can you go into the mortgage dues for me, Tesla? So here are some things that you're going to need when you are, or some things that you should know if you're thinking about buying a home. You do need to put down a down payment. People say it's a myth that you have to put down 20%. You do not have to put down 20%, especially as a first-time home buyer. All you need is 3.5% of the purchase price. And there's also grants available out there. If you don't have money saved up, you can always apply. It's completely free to apply. They are private grants, so depending on what area you're looking to move to, let's say you're looking to move to Nassau County, you should just put into our friend Google, who knows everything, hey, Suffolk County or Nassau County first-time home buyer grants, and you'll see a bunch of applications where you can apply. They're just going to ask you some information about your demographics, about your income, what area you're looking to move to, how many people your family is, etc. So I've seen people get up to $25,000 with those grants, which will not only cover the 3.5%, it will cover majority of your closing costs. And you have to show income. When you're applying for a mortgage, no matter what, the government wants to see you're showing income. Whether it's through a W-2 job, or you can show us your pay stubs, or if you're self-employed, you can show us your tax returns. Like I said, you need to show income, because by law, we have to make sure your mortgage payment and all your debts could be your student loans, they could be your car payment, they could be your credit cards. Everything cannot go above a certain percentage of your income, because they want you to have money for utilities, they want you to have money for food, they want you to have money for gas. So for FHA loans, we cannot go above 56%. For conventional, we have to stay under 50. And also another thing is, which something I'm guilty of, a lot of people keep the cash as cash. They don't put it into their bank account. We have to track where the money is coming from. You can't just have $30,000 laying under your bed and go to the seller and say, here you go. We have to track where that money is coming from, because remember, at the end of the day, this is going to get submitted to the government. So Uncle Sam is going to be like, that's $30,000 that I didn't get paid on, so you are committing fraud and you're going to get into big, big trouble. So that's why it's always good whenever you have money. I know it's good to have it as cash so you see it in front of you, but always put it into your bank account, because we're going to require 2 months of bank statements, recent 2 months. So if you're applying for this month, we're going to need your bank statements from July and June. And the underwriter, their job is to go over each transaction that's reported on your bank statement. So it's good to track everything that you're spending, especially if you're thinking about buying a home soon. And you have to keep good records of your paperwork, because like I said, they might always ask for additional paperwork. They might ask for additional information. It might not be information that you're aware of, that's even being reported on your credit, but it is. We see your whole history once we pull your credit. Like I had a client the other day, he didn't even know his home was in pre-foreclosure, because he had taken out a loan years ago that he forgot about, and they almost put his house into foreclosure, and we were able to save it for him and refinance his home. Do you want to go into the next one for me, Tesla? And here are some things that you should not do if you're trying to purchase a house. Remember that debt to income ratio I was telling you about? If you're making any big purchases, could be a car, could be ring, could be something major that's going to have a high monthly payment, that's going to affect your debt to income ratio very, very bad, and you're not going to be able to get pre-approved for as much. And I also would not recommend, if you're changing jobs, that's okay, as long as it's within the same major. So let's say if you're a teacher, you're going from one school to another school and you're still getting pay stubs, you're still getting a salary, that's fine, that's not a problem. But let's say you're a teacher and you want to start selling stuff on Etsy, you're not going to be able to get qualified for a mortgage, because we're not going to be able to verify your income. We're not going to know exactly how much you're going to make. We can approximate that, but that approximation could be 1,000, could be 5,000, we don't know. And I also, what we were talking about the bank statements, I would not make large deposits, large cash deposits, because the government is going to try to come after you, they could audit you, and you're not going to get approved for a mortgage. All you're going to do is pretty much get yourself in trouble, because that large cash deposit could cause you a lot of headaches. And do not be surprised if you're asked for additional documents, because like I said, there's a lot of stuff that we see on our end that you might not even be aware of, or you don't realize that you're being charged, or that's coming up on your records. So when we're asking you for additional documents, do not take it personally. It's just because we're trying to get you qualified. So I'm going to go into the loan programs, Tesla, because there are certain loan programs that people, want to know about. So there's an FHA program, which is great for first-time home buyers. You only have to put 3.5% down, and the interest rates are extremely low. So your interest rate could be as low as like 2.375, 2.5, depending on what your credit score is. Credit score, that's where excuse me, that's where your credit score, good credit comes in handy. It's going to get you a interest rate, good interest rate, because money is cheap right now. It's literally so cheap right now. 2.5% is nothing on a $500,000, $600,000 mortgage. So the good thing about FHA is, like I said, the interest rates are low. But here's the bad thing about FHA, not a lot of people like to talk about. You're required to pay private mortgage insurance. A lot of people are not aware of this, but unless you're putting 20% down, you're supposed to pay private mortgage insurance just for that security to show the bank that you're actually going to be making your payments. With FHA, you pay it for 30 years. It doesn't get removed unless you refinance in the future when you qualify, and they will remove that private mortgage insurance for you. When you refinance, you'll have to pay closing costs again. But with conventional mortgages, the interest rate is slightly higher compared to FHA, but you're not required to pay that private mortgage insurance for 30 years. And you're not required to refinance to get rid of it. Because with conventional loans, it falls off as soon as you have 22% of equity. And the difference in between the down payment is 1.5%. So with FHA, you're required to put down 3.5%. With conventional, it's 5%. So if you can afford the additional 1.5%, I would definitely recommend getting a conventional loan. And the conventional loans, the mortgage insurance is cheaper compared to FHA loans. FHA loan is set, you're supposed to pay it for the life of the loan. With conventional, we base that mortgage insurance on your credit and how much you're looking to put down. It's probably, I would say, half of what you would be paying with an FHA PMI. FHA PMI on a 500,000 loan is probably like $485 a month, where with conventional, if your credit score is above 700, you're only going to pay probably 150, 200 max. So that's where it's going to come in really handy. I'm not sure if we have any veterans amongst us. VA loan is another option. And with the VA loan, you don't have to put anything down. They cover 100% of the financing. All you have to come to the table is your closing costs. And with the VA loan, of course, you're going to get that low interest rate. And, a lot of people are not aware of closing costs. So when I bring it to the table, it catches them by surprise because they don't know what it is. They think that the bank is charging them, or somebody else is charging them, the realtor is charging them. No. To have someone represent you as a buyer's agent, it doesn't cost you a thing. And to have me as your loan originator, it doesn't cost you a thing. The closing costs are to pay for your title, to pay for the bank attorney, they're to pay for your property taxes. You're required to pay mortgage tax, which is a sales tax on your loan amount in the state of New York, and only in the state of New York, unfortunately for us, you're supposed to pay the sales tax, and the government also charges you to record your mortgage. So I've seen those closing costs also be about 3 to 5% of your purchase price. So I would say, depending on your loan amount, for like $500,000 purchase price, I would say it will probably be around 20 to 25,000, depending on your property taxes. And you have to also open an escrow account, which is also included in your closing costs. So the escrow account is very similar to, I would say, like a security deposit when you're renting a home. We don't know yet if you're going to make all your payments on time, right? And if you stop making your payments, or the bank still has to pay the government their taxes, and we have to pay the insurance company their insurance. So that's why we keep 6 months of taxes in that escrow account, and we keep 3 months of homeowners insurance. In a situation, if you're late or if you miss a few payments, we use that escrow account to make your tax and insurance payments for you. And once you catch up, it just kind of balances each other out. And the last thing that you pay for is title insurance, which I was referring to before with the title report. It will just protect you guys. It will make sure when you're buying the home, you're buying it with a clean, clean, clean title. So let's say, you know, we pre-approved you, Tesla found you a beautiful home, you guys put an offer and you got it accepted. And we went through the whole process of getting it processed, underwritten, title report, and homeowners insurance. What happens? We're clear to close. So we can schedule a closing date for you guys, of course, in communication with your attorney, the seller side, and your real estate agent. And Tesla would take you to a final walkthrough. Just make sure that there is nothing wrong with the house, especially like after the hurricane. I've seen it happen a lot where, you know, people go to the final walkthrough and they see some things are damaged on the outside. So that's when that final walkthrough is going to come in handy, because they could have ruined the wall while moving out. They could have broken things, or, you know, some things might not be like they were when you went into contract. So that's where that final walkthrough will come in handy. And after that final walkthrough, we'll go to the closing table. You guys will sign what's called the mortgage commitment, mortgage deed, where you pretty much are taking over that home, and we're going to be sending the money to the seller. So we're going to fund them. And let's party. You want to take over, Tesla?
Yes, that was great. I think just one more slide. It's just our information. And then, hold on, let me put this back up. Okay. So yeah, so you received a lot of information. Again, I want to talk a little bit about the walkthrough. That is so important, because some sellers, unfortunately, don't realize that they can't take, you know, their microwave and their refrigerator with them. And so when you go into the final walkthrough and you realize all the appliances are gone, that's an issue. So that's the reason why, that's one of the many reasons why a walkthrough is absolutely so important. Tujay, thank you so much. I think it's super clear. I think that was super clear, and you definitely educated me in a couple things. We did leave some time for some questions. I just want to see. I'm going to stop sharing if I know how to. Yes, I do. Am I not sharing anymore? There, I can see myself again.
You're good.
I just wanted quickly to see if there's any questions. Oh no, I think someone said the audio was breaking up. Yeah, if you have any questions or something that wasn't clear, definitely write it in the chat or ask. Write it in the chat or in the question section. That would be great. A couple of questions that I know I have received. Again, I've had a lot of questions. I've had a lot of people. This is why I wanted to do this seminar. And Tucci, you did talk about it a little bit about how do I get paid? And to, like I explained in the beginning, there's always there's a listing agent, the person who's selling the home, selling the house for a seller, and then there's the buyer's agent. When a listing agent enters into a contract with the seller, generally that's where the commission talks come in. And I'm just going to use general terms. For instance, the seller decides in the contract with their listing agent, they're going to pay the seller 4% commission to sell their home. Meaning if they sell whatever the price of the home gets sold, they're going to get 4% off that. But the way it works is usually, and by law, actually part of being part of MLS, you need to agree to co-broker, meaning the seller agent will actually split the commission with the buyer agent, with the agent that brings in the buyer. So generally, we're using 4%, 2% actually goes to the seller's agent, 2% goes to the buyer. So the seller is actually paying for the buyer's agent. So it's absolutely in most cases, I wouldn't say 100%, but just about 100%, especially for me, it's definitely something that a buyer's agent talks to with their buyers. For me, I take what the seller agent gives me. It's generally half of what they get, and that's a 2%. In very rare cases, if say a buyer falls in love with a home that's not being sold on MLS, meaning they don't have an agent, it's what's called a for sale by owner, then we would have discussions on whether or not who pays that that fee. Sometimes the seller who's selling it on their own does that. But again, it's very rare. Most cases, the way I get paid is through the seller. So that's a question I get a lot. Tuche, I have another question for you that I know I get a lot because this market is absolutely insane. That people are putting in over asking offers,
Yeah.
and then they're worried about the appraisal. So as Tuche has mentioned, an appraisal needs to be done for the loan. And if you want to get into that a little bit, because that's definitely been an issue now where someone puts in a very high offer over asking, and then the house doesn't appraise for the loan amount because they put in such a high bid on the house. Can you explain that just a little bit, Tuche?
Oh, of course. So the appraisal company is a third-party company that the bank does not have any affiliations with. We don't have any control over. It's a government licensed company where they go in and their job is to determine the value of the home. Like this week alone, I probably got 6 to 7 contracts that are like $30,000, $40,000 above asking. And that's $30,000, $40,000 above where the value is probably going to be. So if the appraisal comes in short, we can do one of two things. If the buyer does not want to proceed with it anymore because the value isn't there, that's fine. But my one recommendation would be, which is completely free to you guys, we can actually rebut, we can fight the value. So let's say it comes in $30,000 short. I would contact Tesla, who will do another comparative market analysis, and she can send me more comparables in the area that will make sense of the value to the appraisal. And we will send it to the appraiser and we will not argue, but we will fight the value and we will say, hey, this actually makes sense for the value that we're asking for, and we'll go back and forth and we'll make sure that we're getting you as close to that purchase price as possible. And whatever is the difference is, if you're comfortable with covering it, you can. But like I said, that's why you have us. You have us to literally fight for you and make sure that everything goes in your best interest. Tesla does not get paid because she has the seller's best interest at heart. She gets paid because she's literally in your corner throwing punches for you, doing all that research, getting all those resources. And same thing with me. You don't pay me anything. The bank takes care of our commission 100%. So my best interest is to get you the best rate, get you the best terms, get you in the best situation possible long term. Do you have any other questions, Tesla?
I just one more, because I remember when I started, I had this question too, and I hear it a lot. What's the difference between using a loan officer and just going to Chase or going to Wells Fargo or going to one bank at a time to get a loan? What's the advantage?
So I'm a broker. I'm a mortgage broker. What that means for you is I'm able to do all the shopping around for you. So let's talk big banks. If you go to a Chase or a Bank of America or a Wells Fargo, they don't make money on your mortgage. They make money when they're getting your credit cards, when you're keeping your bank account, you're saving your checking account with them, when you're doing auto loan with them. So they literally look at doing your mortgage like doing you a favor just to keep your business. But if you go to somebody like me, I'm able to do the exact same thing for you, and that bank that we would go to will take care of your commission. Take care of my commission, excuse me. So what I'm able to do is the credit report that I'm going to obtain for you is valid at every single bank that's out there. So instead of you going to 10 different banks and having your credit run one after another, which is going to make a big impact on your credit and it's going to drop it, I'm able to do that for you, run your credit, do all the shopping around and see what kind of rates you're going to be getting with your credit score. Then I give you the pre-approval. And another good thing about working with us is, let's say if you're with Chase and then your loan is in underwriting and the underwriter just does not like your loan, you don't have the luxury of just switching to another underwriter. The underwriter that you're assigned is the underwriter that you're going to get, so there is no way of changing it. With us, if one underwriter doesn't like it, we can always withdraw the loan and submit it to another. You're not losing time, you're not losing money, you're not losing the deal, because the seller is not going to deal with it. If you're getting a deny on your loan, they're not going to deal with it, but we're not going to deny you. We're going to try absolutely our hardest to make sure that it goes through. And same thing with appraisal. Big banks only work with one appraisal company. So if they just can't, get you the value, you're kind of stuck. But with us, if one company doesn't give us the value, we can always take that report, send it to another appraisal company, and send them the comps that Tesla is going to give us, and we'll make sure we get you as close to the value needed as possible. And I just, it's like having someone throw punches in your corner free of charge. A lot of times when you're going to a bank directly, they're going to charge you a lot of fees that we just do not charge you.
Thank you. So basically, it's a no-brainer to use someone like Tuche, definitely our CMG Mortgage, and myself, because we have your back and we're on your side. And I think that's been pretty clear. I think we've answered all the questions. Tuche and I both put our phone numbers in the chat box, and you will be receiving a couple of resources from us after I think today or tomorrow for attending. Thank you so much for attending. I hope that you found some value in this. I look forward to speaking with you and helping you get to the next step of buying your home. I know it's a big deal. So I really do look forward to talking to you, and also, hooking you up with Tuche.
Before we get off, I see that there's 4 to 5 questions in the chat. Let's answer them first. They're under the questions section.
Oh, let me see.
So everybody gets all the information.
Oh, there you go. I see it. I'm sorry. Yes.
Oh, it's okay. So I see Karen asked you where you can get a pre-approval. It's you can come to me to get a pre-approval. I have my number down there. I work for Andrew Russell, who's the name. Down there, Andrew is the owner of RCG Mortgage, so we're going to ensure absolutely that you're getting the best rate and best service possible. We have multiple loan officers, so you don't only get me, you get multiple people working for you. Just in case I'm not available, there's 4 other people that will be aware of your situation, and they'll help you literally 24/7.
And it's also really fast, which was surprising to me. Like once you give them the actual documents, it's very quick process. That was the most surprising to me.
That's when working with us comes in handy, because if you're going to a bank, you get assigned to one person and you have to work at their convenience. So they're only working 9 to 5. You might be working 9 to 5, so you might not be available to speak. So you have to make sure that the person that you're working with is available to you at all times and is accommodating with your timeline. Gomaira asked if I'm able to help home buyers locate and apply for grants. Yes, I can send you a few that some of my past clients have used and had success with, but it's pretty much going to be the same grants that you can find on your own too when, like I said, you go into Google and search. But if you text me, I put my number in the group chat, I'll be able to help you out with that. The audio was breaking up. What do you mean by an escrow account? So escrow account is a security account for the bank, because when you're buying a home, your property taxes and your homeowner's insurance get rolled into your mortgage, your monthly mortgage payment. So you're just making one payment to the bank, and the bank is going to be paying the government their share, and we're going to be paying the insurance company their share. So if you're not making your payments to us, we are still required to make those 2 payments that I mentioned. That's where the escrow account comes in handy. Like especially during COVID, a lot of people went into forbearance or deferment. They were paying the bank, but the bank was still supposed to pay the government and the insurance company. So that escrow account helped us make those payments, and then once you catch up, they just kind of go back into your escrow account. When looking at W-2s, pay stubs, etc. during the mortgage process, is there a specific amount of work history that is necessary to show? So it depends on each person's situation. Every situation is unique, and we can cater to most situations, but what the banks like to see is 2 years of work history. So if you're self-employed, you definitely need to show 2 years. If you're a W-2 employee, that could differ. And here's what I mean. Let's say you just graduated college last year and you only have 1 year of work history to show. They will accept that because we know we can backtrack and see what you were doing. We can backtrack and see and use your diploma as proof that you were in college and you recently graduated and that's why you started working now. Or let's say, you had a baby and you couldn't work for 2 to 3 years and you're just going back to work. So we can use 1 year of pay, 1 year of W-2s to prove that you just recently went back to work, and we would just get your work history, like older W-2s to prove that you were still working back in the day. Or let's say, you got hurt on your job and you couldn't work for a few months and, your W-2 was lower than, the years before. There's always going to be paperwork to prove it. We write what's called letter of explanation. So for each situation like that, we can just, work with you and write those letters for you to make sure that your loan is still going to get approved. How much down payment is needed for 450? I'm just going to calculate that for you and then answer the question. Give me 1 second. Okay, so Gomira asked how much down payment is needed for a house that's valued at $450,000 with a 5% down conventional loan. So you're going to need to put down $22,500. That's all you need to put down. You can get into the conventional loan and your PMI will disappear once you have 22% of equity. And the second part of the question was, is a seller's concession still being used in the hot market, being that houses are flying? So they are still being used, but not a lot of people are going to accept that contingency of having the seller's concession because, like I said, all the offers are already coming in higher than asking price. On top of the asking price, now we have to worry about adding the seller's concession. So the seller might not like that because they're already worrying about the appraisal coming in short. Now they have to worry about it coming even shorter, and at which point then they have to budge and give you a lower purchase price, or they just lost all that time and now they have to relist again, they have to show the house again, they have to find a new buyer. So I've seen that 99% of the sellers will not accept the contingency, unfortunately, but like I said, there's always grants out there that you can apply for. So let's say if you have the down payment and you don't have the closing costs, you can always apply for those grants and see if you qualify for anything.
Also, with the seller's concessions, really quickly, remember when I talked about making an offer and putting in those terms? Those are the type of terms that sellers definitely take into consideration on whether or not they want to accept your offer. And also, correct me if I'm wrong, Tucci, when a seller sells their home, they pay taxes, and they pay a specific tax per $1,000, I believe. I don't want to say, I think it's $40 per, I don't know it. It's something like that, I believe,
It's called transfer taxes,
yes.
Just so you know. They have to pay to transfer the house to your name, just the same way you're paying the mortgage tax, which is the sales tax, they have to pay the transfer taxes.
And if you have a seller's concession that gets placed on the mortgage, am I right to say that they're paying that 15 grand, the taxes get included with the 15 grand, even though they're not actually getting that payment?
Yes, so they'll have to pay.
So that the home, so say like the purchase price is 500 grand. Normally, if there was no seller concession, they're paying taxes on 500 grand. But if there's seller concession, the loan shows 515 grand. They have to pay taxes on that, even though they're only getting the 500. So a lot of sellers don't want to do that. Especially in this market, they really don't have to because there's just so many offers. So if you really want a strong offer, I would definitely recommend against the seller concessions and definitely recommend to buying grants as Tucci suggested.
And another good thing is you can always use gift funds. This is not something that a lot of people know, but you can get funds from your family. Instead of them buying you a gift for your house, they could just help you towards your down payment or closing costs. All they have to do is transfer the money into your account, and we have to see their 2 months of bank statements because we have to source where the money came from. So you can also, get a gift if you're lucky enough from your parents, sister, cousin, anybody that's willing to give it to you.
Thank you for that. Okay, did I miss any? I feel bad.
No, you're fine. It was
Great.
only you. I think we covered everybody's questions, and both of our direct numbers are in the chat. So if you have any questions, just send us a text message. We'll schedule a call and we'll go over everything.
Yeah, and we're gonna be sending. I'll be sending out today or tomorrow. Also, other resources, and that will also be helpful to you too. Thank you so much, for your time and coming out and hanging out with us. Tuche, thank you so much. You're so insightful.
I appreciate it. I appreciate everyone joining us. And Tesla, thank you for hosting this. This gave me the opportunity to educate some people out there that it is possible for them to buy. They don't have to wait until they have 20%. They don't have to wait until they have 700 credit score. All you need is 580. As long as you're above a 580 credit score, you will get a mortgage.
Yeah, fantastic. So let's get started, guys. I'm really excited. Thank you. Have a great night, everyone. Bye.